Trading stock options can be a powerful strategy for investors looking to limit their risk while maximizing their rewards. Here's a comprehensive overview of how stock options work and the benefits they offer. Stock options are financial derivatives that give investors the right, but not the obligation, to buy or sell a stock at a predetermined price known as the strike price within a specific time frame. There are two primary types of stock options: call options and put options. Call options give the holder the right to buy the underlying stock at the strike price before the option expires. Investors typically buy call options when they expect the stock price to rise. Put options give the holder the right to sell the underlying stock at the strike price before the option expires. Investors buy put options when they anticipate a decline in the stock price. One of the most significant advantages of trading stock options is the ability to limit risk. When purchasing options, the maximum loss is limited to the premium paid for the option. For example, if an investor buys a call option for $5 per share and the stock price drops to zero, the maximum loss is the $5 premium. This contrasts with buying stocks outright, where the potential loss can be substantial if the stock plummets. Investors can use options to hedge against potential losses in their stock portfolio. For instance, if an investor holds a significant position in a stock but fears a short-term decline, they can buy put options to protect against that downside risk. If the stock falls, the gains from the put options can offset the losses in the stock position. Options allow investors to diversify their portfolios without needing to buy large quantities of stock. By using options, investors can gain exposure to multiple stocks or sectors while limiting the capital at risk. Options provide leverage, allowing investors to control a larger position with a smaller amount of capital. For example, buying one call option contract typically represents 100 shares of the underlying stock. This means an investor can participate in the stock's price movement without committing the full amount required to buy the shares outright. However, while leverage can amplify returns, it can also increase risk if the market moves against the position. In addition to limiting risk, stock options can also enhance potential rewards. Because options allow investors to control a larger position with less capital, the potential returns can be significantly higher compared to trading stocks directly. For example, if a stock rises from $50 to $60, an investor who bought the stock would realize a 20% gain. However, if they held call options with a strike price of $55, the percentage gain could be much higher, depending on the option's premium and the stock's movement. Options provide a wide range of strategies that can be tailored to market conditions and individual risk tolerance. Investors can create strategies such as spreads, straddles, and strangles to take advantage of different market scenarios. Investors can also use options to generate income through strategies like covered calls. In this strategy, an investor holds a long position in a stock and sells call options against that position. The premium received from selling the call options provides immediate income, and if the stock price remains below the strike price, the investor retains both the stock and the premium. Options can be used for speculative purposes, allowing investors to bet on the direction of a stock price with limited capital. If an investor believes a stock will rise, they can buy call options instead of purchasing the stock outright. If their prediction is correct, the returns can be substantial. Trading stock options offers investors a unique opportunity to limit their risk while maximizing their potential rewards. By understanding how options work and implementing various strategies, investors can navigate the complexities of the stock market more effectively. However, it's essential to remember that while options can enhance returns and provide risk management, they also come with their own set of risks. Investors should educate themselves on options trading and consider their risk tolerance before diving into this market. In summary, stock options can be a valuable tool for investors looking to manage risk and enhance returns, making them a popular choice in the financial markets, especially with the right strategy. Greenwood stock trading has helped traders be more successful for years. Let us help you along your journey. Message us for your free customized strategy call. See you on the other side of success.